So let's get right into Michael Burry. How about that? I think Michael Burry's always got a good thing to say that makes people think. Michael Burry from Big Short. What page is it on? Page 6. Let's get right into it. Michael Burry, Big Short.
Kai, let's pull up a
6.
picture of the infamous Michael Burry. Let's pull up his picture of his character.
Gotta love this guy.
People need to know who this gentleman
He's not a
is.
freak. He's a regular-looking guy.
He's a regular-looking guy. Big Short investor Michael Burry is back on Twitter and warning of the biggest market bubble in history. This is a market insider story, suggesting that his concerns about rampant speculation only grew during this 10-week hiatus from Twitter. People always ask me what is going on in the markets, the investor tweeted. It is simple. Greatest speculative bubble of all time in all things by 2 orders of magnitude. Flying Pigs 360. The hashtag was likely a reference to a famous saying in investing, bulls make money, bears make money, but pigs get slaughtered. Burry has repeatedly told investors, and they're being too greedy, speculating wildly, shouldering too much risk, and chasing unrealistic returns. The Scion Asset Management chief deleted his Twitter profile in April after sounding alarm to Tesla stock, which he's short, as well as GameStop, Bitcoin, Dogecoin, Robinhood, SPACs, inflation, and broader stock market. So having said that, Tom, do you agree with what Michael Burry is saying? I mean, this is not a guy that just throws comments like that out there.
Right. You know, I think he's correct on a couple axes. And the question is going to be is which sectors pop, right? Which sectors, I don't mean pop up, which are the classic pop of the bubble? Because there are 3 factors right now. Inflation is low, but everybody's talking about it going up. You look at the number of times it's mentioned in the media. You see all those charts. People are talking about inflation. Interest rates have continued to be at historic multi-year lows, and which makes debt cheap. So you've got 3 problems. 1, I can get all the capital I want. Asset prices get inflated. Speculation is there. We've already talked about people taking the millennials and the Zs taking their checks and open a Robinhood account rather than using it for anything or paying their parents' rent. And so I think he's right. You've got all these things that are driving up speculation in the market because there's so much capital out there. Debt is ridiculously cheap. And, you know, I think he's right. The question is going to be, where does a correction happen? Does a correction happen in real estate? Does a correction happen in energy? You know, where does a correction happen? And right now, you know, my eyes are on real estate because what's happening in real estate, there's a really bad side of it that's happening on rents. And so I think the government's got to step up, but I think he's right. And so what will be the pin that pops the bubble? I don't know, but I'll tell you, I think he's right.
What do you mean by rents? It's off, by the way. What do you mean by rents?
Well, what's happening right now is if you take, you know, you and me, maybe we buy a small house and we're going to have it as a rental. Right now, if we pay 50-60% cash, you know, we probably keep the rent at some current market moderate. But right, even at low interest rates with debt, we look back and we do the math on it, and the rent needs to be 5, 6, 7% higher than it was a year ago because the underlying asset cost us more to buy. And there's a payback model. We're not trying to gouge renters. It's just the payback on it. So I'm looking at rents that are being driven by housing prices.
It's interesting that you bring up rents and real estate because if you actually look at essentially what is named here, he's talking about Tesla stock, GameStop, which we all experienced at the beginning of this year, and I interviewed the founder of Wall Street Bets, who had very strong opinions on everything that was going on with GameStop. He names Bitcoin. He names, obviously, Dogecoin, Elon Musk, a little friend right there. Robinhood, SPACs, which we cover a lot. Inflation, which the Fed just came out and Jerome Powell had some words to share on inflation.
Yeah, maybe I will, maybe I won't, but I'm thinking about it.
And the broader stock market. So he names all these asset classes that, like you said, could pop the bubble. I think it's just interesting that he didn't name real estate, but you instinctively said, well, you know, maybe the real estate here, because where did Michael Burry make his name for himself was when he basically called the subprime mortgage meltdown in 2008. He basically bet against America. And if you ever saw the movie with The Big Short with Brad Pitt and
well, Hollywood glamorized it, but what he was pointing out was there were bad mortgages in bonds, and there was insurance on those bonds, and that combination was the classic line that was in The Big Short. It says, if the bond was the, what was it? If the bond was the, was the match, then the insurance that was on the bond, that was 20-to-1 insurance, was the nuclear warhead. And it was, he was right.
Yeah.
He was right. He said there were crap
By
mortgages.
the way, if you're
People
watching
shouldn't
this
have
right now,
mortgages and bonds.
I'm curious, if you're watching this right now, how many of you, your rent has increased? I just looked at an article right now. Rents for single-family homes just saw the largest gains in 15 years. This is a June 15 story, which is 2 days ago.
And when they say gain like a stock, what they're really saying is the rent went up.
Increase. Yeah. So single-family rents were up 5.3% year over year in April, rising from a 2.4% increase in April. 5.3% rent went up. That means if I'm paying $2,000 a month, now it's $2,100, right? If I'm paying $3,000, that's $3,150, which you may say, Pat,
I don't think that's that big.
That's
Wait a
not a big
minute.
deal.
Those are single family.
That's another
houses, though.
2/3 of a month.
That may be not a lot to you. Remember,
Yeah.
the guy that's making $50K is going to see this.
Yeah,
that is the
that's
largest
$1,200 a year.
annual gain in nearly 15 years regionally by top 20 metropolitan markets. Rent gains were highest in Phoenix, and then lower prices, 70% less.
Let's do super fast math on your example, Pat.
Yeah.
You said for people listening, $2,000 goes up 5%. That's $100 bucks. That's $1,200 a year. So now you're on your way to adding almost a 13-month to that rent. See that to the average person.
So here's how that looks. If you go, let's just say they increase $2,000, $50, that's $1,200 a year. If a person's making $50,000 a year, what's $1,200 to them? Is that 2%? That's 2%, right? 2.5%, 2.5% of their income just went down.
That's pre-tax, obviously, right?
That's pre-tax. So
Yeah.
even if I go post-tax, that let's just say that's a 4% decrease, right?
They need a 4%
So
raise to keep up with
imagine you go to your company and you go to your company and they say this year we're decreasing everybody's salary by 4%. You may not feel it, but you're going to feel it, right?
Yeah.
Because for that middle America low-income family. So, and then it's not only this, gas goes up. Everything is pretty much going up. So you're only seeing one aspect of expense. People are going to see it in other places. But if you're watching this and your rent went up, I'm curious. Has anybody felt it anywhere? UK, one person said their rent went up 5% in UK. Mark Sesh just says, my buddy's rent went from $1,360 to $1,700 in Mesa, Arizona.
Yep.
Anyways, we're going to see what's going to
happen.
happen. That's a big number.
Time to find a new apartment.
Well, he's also in
back,
Mesa, Arizona, where there's high demand. Too.
Back to Michael Burry. Is this someone that you would want to get his perspective on Valuetainment? Is this someone that you think
We've spoken to Michael Burry. Michael Burry doesn't want to do an interview, but if Michael Burry wants to do an interview and we'll just do audio, we will all day have him on here. I would love to have him on, no problem, because I think the guy's counsel and the way he sees stuff, you're not necessarily 100% right, but you have to get perspective. And to me, I think eventually, if you've been in this game for a while, like let me give you an example, okay? Sports. Can you see when a tide's turning, when the team's about to make a comeback?
Yeah, literally last night, Philadelphia versus Atlanta. That was
Pathetic
ridiculous.
what just happened.
Philly was up 20, then they lose by 7.
They're up
It's
20
horrible.
and 26 in the third quarter with 3 minutes left. The bettors in Las Vegas said there's a 99.7% chance
Meltdown.
that Philly's winning, and they lose it, right?
Yeah.
But you start noticing people are playing sloppy. People are getting nervous. They're missing free throws. Michael Burry is that guy in investments. You have to listen to what he has to say. It's that simple. When he says it, he's got a point, and I think if it does happen, it is not going to be pretty. Here's the only thing to be thinking about. This is just my thoughts on this, on what to be thinking about. Is it fair to say every 10 years we have a crash?
Correct.
Is it fair to say every 10 years we have a crash?
It's part of the cycle.
Let's go back last 10 years. What was the biggest crash in the last 10 years from 2011 to 2021? Biggest crash.
Obviously, the COVID.
COVID. You're right.
Yeah,
Okay,
obviously,
perfect.
yeah.
Go from 2001 to 2011, the biggest crash.
2008.
The great
2008.
Great Recession.
2007. Yes,
and
go
the mortgage.
1991 to 2001.
The dot-com boom.
The dot-com bubble, right? 99.
99.
Go 81 to 91.
What, 87?
87, 88.
87, 88.
Recession.
If we go every decade, there is a crash. Here's the only differentiator. So the only differentiator is if you make 20-year runs, you're not affected by it.
That's correct.
If you're making 20-year investments, you're not affected by it. You're only affected by it if you're volatile, GameStop's going to make me a billionaire and I'm going to make my money off Dogecoin. If you're playing that speculative game, many are going to get their tails handed to them. But if you're playing the long game, you may lose 30% of your portfolio. You may lose 20% of your portfolio.
Right.
Long game, you're going to make money.
This is the difference between day trading and decade trading, right? I mean, day traders,
Exactly.
like, this is literally goes back to his quote, where, you know, bulls make money, bears make money, pigs get slaughtered.
Yep.
So if you're just all in on Bitcoin, all in on Dogecoin, you think it's going to the moon, you know, there could be a crash landing sometime soon.
Yeah, you know, because what you have
Like you say, sorry to cut you off, Biz Dog, but you say about Valuetainment, I'm on a 20-year run here. I'm doing this for 20 years.
Yep.
So a video you do today might pop, it might get 1 million views, or a video you do next week might crash, but you're in this for 20 years. Who gives a shit?
Yeah.
Like, things will happen.
Yeah,
So-
you know, you look at it this way. So 529s are out there, which is a
College savings
education.
plan.
correct,
Yep.
exactly right. So when Bailey was younger, I left it in what's called Age, and it was TIA CREF that was managing it because they were the sponsor for California. Every state's got a different financial provider that does their 529. So when Bailey was there, I had on age synchronized risk, which means when she's in kindergarten, the risk that they're allowing to be in the investments that are in there automatically. I don't make the decisions. I just say, I'll take the age.
It's kind of like a target date fund.
Correct. That's exactly right.
In finance, yeah.
So what happened was, you know, she lost 30% of her poor little 529.
When she was 4 years old, probably. How old was she?
4 years old.
Yeah, okay,
right?
yeah. Now it's bounced back.
And that's right. Now it's back, and it's tripled since then.
Bailey's a millionaire.
No, she's not a millionaire, but she's not going to have student loans for her bachelor's. I'll tell you that.
Great. That's
So
a great
now-
dad right there.
So,
No. Her
But,
grades are insane. Go ahead, Tom.
and then what I did was I flipped the switch on age synchronized risk when she was a freshman, because I was thinking about the traders that maybe the synchronized risk what they're looking at the current market, and I moved it to you know market index funds and that, which is another choice.
Yeah.
The age synchronized risk has been more volatile, and I'm like, wow, their age synchronized risk. These are people that are supposed to be professionally managed target date funds, and even them, PBD, are, you know what I'm saying?
Yeah.
They're a little too crazy. But Brooks Fund, I don't worry about it, because if it pops right now, it's like 2008 for Bailey, and then it's going to be back. But I think that even I'm seeing in Wall Street, just in the 529s, I think there's more, optimism and riskiness, even at a time where they're supposed to be managing it according to a target date fund. And
So what's your advice to the young people out there who are just starting to have kids and they're basically setting up these 529 plans?
Look, it's the taxes are going up, and so if income taxes are going up, there's more reason to live moderately and to get 529 protection for some dollars for your kid, and take the long view. Take the long view.
Yeah, I mean, listen, here's the point. You're working day to day, you're going to get crushed. You're working long term, you're going to be all right. If you're going to be constantly emotional, buying, selling, you're going to take a hit. But the reality part of it is, take a look at Ken Golden from Golden Auctions. This is a collectible cards auctions. He just raised some money last year. Do you know how much he sold last month in cards? Just last month, Bloomberg contacted him to do a story. You know how much he sold last month in collectible cards? What do you think he sold just last? Did I tell you the number?
No.
What do you think he sold last month? Total collectible cards, just last month auctions.
I'm going to make a wild guess.
Just remember, like, this guy was doing a couple $1 million a month. Then he went to $5 million. Then he had a record-breaking month. He did $10 million. What do you think he did last month?
I'm going to say, with all the capital that's out there and everything that's happened, did he touch $1 billion?
$1 billion a month?
In a
No,
month?
that's aggressive.
No, cards, Tom.
I would say
Cards.
max
No,
50 million,
50
100 million.
He did
Wow.
50 million last month.
Wow, that's crazy.
But you know what 50 million is?
Up from $1 million, though.
Guys, you know what 50 million is? 50 million is $51 million cards. It's $500,000 cards. It's $100,000 cards. I don't think people rent like the 50 million.
And you've got half of those in your
100,000
vault.
times 10 is $1 million. Times another 10 is 10 million. So 100. You're talking about the guy's selling so much right now because people are willing to buy cards today. They're not going away, right? But is that going to be the case if the market tanks? I don't know about that. Long term, are they still going to be great investments? Non-duplicatable assets will always keep their value.
We need to add
Period.
non-duplicatable assets. What's your point?
Non-duplicatable assets. That's it. Non-duplicatable
What's it like
assets.
to have a calculator in your brain?
What's it like to have a calculator?
You're literally like,
Well, I messed one of them up when I said 50 million times 100,000.
But you do have a calculator up here. I'm like, let me bust out my calculator, dude,
Yeah.
and get it. You got something going on up there.
500 times $100,000 cards. That's what I was going to say. It's $100,000
Those
cards.
days to drive you nuts, But you're on the big run.
Yeah, if you're on the long, like, listen, you building a business. You have a bad day. You had a bad sales day, but you busted your tail. Don't worry about it. Now, here's the thing. If you had a bad sales day, but you didn't bust your tail, worry about it, because habits are what gets you destroyed long term.
Because you were living easy and living assuming.
But isn't there a bigger story here, a bigger metaphor for whether that's investing, whether it's relationships, whether it's health, whether it's trading cards, whatever it is, that you're going to have good days and bad days, but overall, if your perspective is positive and you're here for the long run, things are going to work out well. Obviously, if you work hard and you're all right, BizDoc, sneezing on the truth there?
If you do your part, yes. Yeah. If you get emotional, no. If you're constantly getting rattled, no.
Right.
If you're constantly like, what'd you say? What happened? What did he say? If you're constantly, what did the market do? Oh my gosh, take it out. It's react.
This goes back to your stoicism that you talked about last episode.
Well, no, and also what he talked about a minute ago about what asset class are you playing in? If you're in a very risky sandbox that doesn't have natural scarcity for what's in there, non-duplicatable assets with natural scarcity, real estate on the beach, scarcity. Right, so it may crash and everything, but that's the part. The scarce stuff that will be in demand is going to come back first. And so, but if you're out there, I'll give you an example. If you're out there on GameStop and you're just living with the guys on Reddit, on one stock there, talking about retail purchase of games at a time when games are all in the cloud, I think that is foolishly risky, because there's nothing to come back when the party's over.
You know what I will say? If you're under 25,
gold cards.
If you're under 25 and you're doing it, go at it. If you're under 25 and you're doing it, go at it.
You're going to learn something.
You're going to learn something. Listen, I was 25 and $49,000 in debt. You know what I did one time? Let me tell you one of the dumbest things I ever did in my life. You ready?
Is this the Vegas gambling story?
This is the dumbest thing I did in my life. I'm 25 years old. I'm 20, Freddie Chacon. So this is what, I'm 23 years old, okay? I go to Las Vegas. I'm trying to say, when I get my Morgan Stanley job, I got a 9/11, so it's a week before I'm at Morgan Stanley, 9/10. So this is 9/3/01. How old am I? 9/3/01. 22 years old, okay? I got an MBNA credit card. I go to Las Vegas. I said, screw this. I want to make some money. So my MBNA card allowed me to take out $5,000 cash. So I take the whole $5,000.
Uh-oh.
I go at the table.
Paying 20-something%.
And
probably.
this is at a time where I'm sitting there, I'm wearing this tank top, I'm just like chiseled, I'm in great shape. And
this is the Greek god they talk about.
This is the Greek god day. And the cashier says, mistaken me for somebody else, saying, "Are you here for the what is it, Vivid convention? I don't know what it was. Are you here for
the AVN
convention?"
Yeah.
Said, "Are you here for
Matter
that?"
of fact, I am.
I said, "What do you mean?" It says, "Are you here because are you one of the
AVN is the
actors?
adult
Are you?"
stuff, right?
Yeah, that's
You're
exactly
nominated Actor of the Year.
So he brings the other guy.
I'm sorry, I know you finished second that year.
So they're doing all this stuff,
That's
and we're
right.
having a lot of fun together. And then I said, "Guys, I'm gonna make $30,000 today. Period." I take the $5,000. Ask me how long it took me to lose the $5,000.
Yeah, what, 5 minutes?
30 minutes.
But, yeah, gone.
By the way, $5,000 may not be a big deal to you right now.
No, it's a big deal. If you're
but
gambling,
when you're
what?
22, you got $1,000 in your bank account savings.
Yeah.
You have nothing else. You don't have a 401k, and you put $5,000.
It's insane.
And you leave, and you're like, at this point of the game, I got nothing left. I got
At age 22.
22 years old, and I'm going back. I'm going to go back into the Army. This is a screwed. I'm going back to the Army. On the drive back, I get the call saying Dave Kirby has offered you a job at Morgan Stanley Dean Witter. I said, you got to be kidding me. I started on a week after I lost $5,000.
Unluckiest and then luckiest.
Let me
Dave.
tell you, it was the
Thank
weirdest.
you for the call. I kind of need a job.
Well,
at the
yeah,
moment.
it's like, listen, I honestly have many options right now, but you know what? I will take your job because I want it. And then back in head, you're like, no, I desperately need a job right now to make up. So the point is this. Look, when you're younger, if you want to do some stuff, great. Don't make the big, stupid mistakes that you're going to pay a price for 20 years. You're going to make a mistake you're going to pay a price for next 3 to 6 months, whatever. Not the 20-year type of mistakes. But long-term, if you're investing long-term, you don't have a lot to worry about. So if you enjoyed this little short segment from the podcast that we did, here's another short segment to watch. Or if you want to see the entire podcast, click over here. Take care, everybody. Bye-bye.